Ravi Muthukrishnan, co-head research of ICICI Securities is ready. Ravi, good morning. Thank you for joining us. Ravi, Indian markets have made a roaring comeback in last 2 days. Do you think the budget disappointment or the budget adjustment is over?
First of all, I should compliment the finance minister to come out with a budget which is incrementally positive for India. Immediately after the budget, we saw that the markets did not respond too well to the budget. But as clarity came in, I think there's a lot of positivity in the market. To me, I think it has been a good budget, incrementally positive for India. Though, of course, I thought there would have been more clarity on the subsidy front, maybe in terms of the retrospective tax and things like that. But the biggest plus for this budget was the focus on investments in terms of budget allocations, in terms of investment allowances, in terms of SLRs and CRRs for banks, and moreover in terms of making it very explicit about the PSU's role in investment. There has been concerns though about whether the 4.1 fiscal deficit for FY15 will be attained or not, because there has been some doubts about whether the revenue targets would be met. To us, we think it's possible, but should there be some lapse in that front, I think the government could easily make it up by disinvestments or selling off stake in some of the government stocks. So all in all, incrementally good budget, considering the fact that it was just about 45 days for them to come out with something like this. I think we can expect more positivity moving forward.
Ravi, very quickly on the budget day, it appeared that GAR could be a thorny issue, but thankfully that GAR issue, even though no clarity has emerged on it, has not disturbed the FI picture, FI flow picture.
Yeah, whatever happened in the GAR front, I think was more or less compensated in terms of other sort of benefits which the FIs started getting out of this budget. I think net, I think the positives out of the budget for FIs has been more than this issue, which has been a thorny issue for quite some time. But I think they will try and resolve it as early as possible. I think that is what built up the confidence in FIs. More so, India as a story is a good story now. And India, when compared to the other emerging markets, is definitely a country to be in. So I think that's what would have provided the impetus for FIs to come into India.
How would you read into yesterday's move, wherein we are now back to 7,600? Does it seem like this could be the start of another, leg of a rally which could take us higher than what the previous one did, and we could make a fresh high for ourselves?
We have always been very positive about this market. Post the government took over, the NDA government took over. All the fundamentals have started to improve, the economic fundamentals, I mean. Even I see that the company fundamentals should improve from here on. In one of my reports a month back, I had predicted, based on a very systematic calculation, that the EPS numbers for Nifty would at least grow at 20% year on year, and the Nifty earnings by 2018 would double. So two things could happen now. If the earnings starts to improve, which I think it possibly will, and you could also expect a re-rating for the Indian markets. So for us, the end of the year target has been 8,100. And we remain with 8,100 for now. We will wait for the earnings season to be over to revise our targets. But net, we are very positive about this market, and we see it trending upwards from here on. Unless and until there are global factors which might and of course monsoons not being as expected, which I don't think will be the case, because today's newspapers say that it is just about 36% below the long-term averages, and in 20% of the regions in India, we have had more than the normal rainfall. So I think rainfall as a problem moving forward may gradually diminish. The El Nino effect, I think the concerns are over, more or less over. So what remains to be seen as to how the global economy evolves from here. But should everything go well for us, I think we are in a stage where the markets should only trend forward.
Ravi, how I wish anyone could predict the rain gods with correction, or rather precision, I should say. But, you know, just getting back to the point that you were making, that you do expect the markets to go higher from here, and irrespective of the global cues at this juncture, as well as a deficit monsoon, you do expect a target of, 8,100 on the index. What do you think is going to lead the market higher from here? Would there be any sectoral leader, or do you think it's going to be an across-the-board rally that we're going to witness?
See, before I comment on this, what I said earlier on, I said that the concerns about monsoon and the concern about global economy still remains. If they turn positive, then we are definitely in for a great bull run. Coming back to your second question about which are the sectors which will lead this market. If you look back, what you will realize is that the beaten down sectors for India has been the industrials and manufacturing. Capex has been very low in these sectors for long. Now, in the context of what's happening now, with a stable government in place, with a lot of focus on infrastructure, we see great days for companies in the cap goods space, or put it in a broad sense, the industrials and the manufacturing space. I think moving forward, these two are the two major sectors which will lead the rally for India.
Ravi, the other pocket that I want to talk about amongst the mid-caps is the auto ancillary space and the kind of fabulous run-up that we've seen in the sector. Does it seem like this could just be the beginning of it, or do you think the rally is close to over in the auto ancillary names?
I would like to tie up this rally in that space with the auto space itself. Now, if I were to look at the auto space, I think it's great days for the auto sector. Sentiments have increased, new models are being lapped up. The disposable income in the hands of people are going to increase because of the SOPs which the government has given. So if it is good days for the auto space, I would expect that there could be good days for the ancillary space as well. So I think there is still steam in that sector. May not be great steam in that sector, but there is some steam left in that sector. So it is wise to still stay put in the stocks in those sectors, in that sector.
Ravi, but historically we've always seen that auto ancillary companies, they lack pricing power. They are always dependent on the whims and the fancies of auto companies. And auto companies are always the smart guys. They always, compress. They always keep margin picture subdued for auto ancillary companies.
Correct. I think for them it may not be about pricing now. It may be more in terms of volumes. I think with the numbers coming out of companies like Maruti Suzuki being very, very good, Bajaj Auto also expects to do very well in the export front. And with the lot of money being spent on infrastructure, you will expect the MCVs and light commercial vehicles also to do well. So net, when all these subsectors in the auto space do well, I don't see why should the volumes not increase for the ancillary space. So I think the bet is more in terms of volume increase than in terms of price increases.
Ravi, in a bull market, 90% of the stocks, they always move up. But the big money is made when you identify multi-bagger ideas. So what are your high conviction ideas? Where are you allocating? Where are you recommending your clients that they need to allocate disproportionate amount of money?
We are still overweight on cyclicals. We still believe that there is a lot of story left for cyclicals, especially after the budget. Some of the stocks we have identified in this space are, for example, as we already spoke about, is L&T. We have identified some banks like Axis Bank, Yes Bank in the banking space. We have identified two PSU banks like PNB and BOB. In the NBFC space, obviously IDFC is a good bet for us. Our target price for that stock is about 204 today. Because of affordable housing happening, I think there are also good stocks in that space like Group Finance, and in fact we also have a buy rating on LIC Housing. We have a buy rating on two infra stocks, which is your Sadbhav and Ashok Buildcom, because we think should the road infrastructure move up the way the government has been talking about in terms of the number of kilometers of road to be laid in the future, about 8,500 or something. I think both these stocks also have good reason to be looked at. Not to take away the credit from the spaces like IT and pharma, we still have a good view on Infosys, for example, Wipro, because we also believe that the global economy for these sectors, especially IT, the European market doing very well. I think IT should also do very well. The way I would look at it is look at quality stocks in the cyclical space and move money from there to some defenses like IT, because, and during dips though. Because IT sector, pharma sector, sectors not to leave out, but a major amount of money we would advise clients to put it in cyclicals.
What about metals? Do they form part of your cyclical portfolio?
We're not very gung-ho about that space as of now, excepting for one stock, which is NMDC. Hindustan Zinc may be a good play should the government decide to divest some of its stake in that stock. Other than that, we don't have a good rating for other stocks in the metal space.
Ravi, for those who are betting on pure infra plays, which is the best infra play? Is it ports, is it road builders or asset owners?
I would, as of now, recommend recommend roads. In fact, like I said before, we have a buy rating on Sadbhav and Ashoka Buildcom. Yesterday, for whatever positive news has come to Adani, I would rather want to give the second best to ports. And the rest of it, I will wait for some more time to see more clarity. Maybe the next budget will have more impetus for the other sectors as well in the infra space. So we will probably want to take views on the other subsectors in that space moving forward. But as of now, it's roads for us and ports for us.
Right.
Real estate also, we're gradually getting positive because of, yeah.
Ravi, you've talked about banks, but what about the other typical rate sensitives, the likes of autos, or for that matter, realty as well? Anything that you like there?
In auto, we like Maruti, for example. Maruti we like because the volumes have been growing up, though the discounts which they be given is a slight concern for us, but volume pickup is happening in Maruti. We like Bajaj Auto for the simple reason that the exports have picked up and they also get to benefit from rupee appreciation. And the third company we would like at this moment in time is Tata Motors, because JLR volumes are expected to pick up. And the new model, the Range Rover, is now going to be released in all geographies of the world. So I think, though of course their Indian business is not doing great, so three companies in that space for us is Tata Motors, Maruti Suzuki and Bajaj Auto. Real estate, we are generally positive about those real estate companies which have more towards business infrastructure rather than residential, because the REITs are also going to give them the extra benefit now. So companies like, for example, Oberoi Realty is definitely one of our best favorites.